Hello, my name is Ron Obucio, and today I'm going to present you about Alphabet Inc., or well known as Google. So, first of all, the company overview. About Alphabet Inc., or Google, is the global leader in digital services for search, cloud, YouTube, and Android. It has diversified its revenue streams across advertising, cloud, and new ventures. It has a lot of leadership in AI integration and technology innovation. Some of the key financial metrics till August 2025. The share price rounds between 177.66 and 883.94. It's near all-time highs. So basically, also all the market is bullish. So right now it's a very good investment to do. The market cap it's about 2.44 trillion. That is the top five globally, and it's a lot if you think about money terms. The price to earnings ratio is about 21.5. That is below the average. And the total cash is 95.15 billion. That is exceptionally high. So you can have an idea. This is like this amount of cash can be the same as some countries' GDP. So it's a lot. They can buy entire companies with this amount of money, but like hundreds of them. The recent dividend it's about 0.20 to 21 cents. And also they have like a new capital returns program. Some of the strengths and challenges Google face and the pros and the cons. Basically, the pros can be that they have a market dominance and have diversified their growth. They have a robust balance sheet through capital allocation and Eastern management and institutional support. And some cons can be ongoing regulatory scrutiny, antitrust actions. So you will know that Google is very big and has a lot of branches in it, and we'll see it in the income statement. High capital expenditures for AI and cloud, but so as many other companies do, as OpenAI or maybe Microsoft, and advertising concentration risk is also remaining. So for this slide, I captured how the value is created for Google. We can see here that Google is a platform that has four main, the linchpin are the users. And you can see that the users gives data and engagement to Google, and Google gives services and tools. The advertisers pay for the targeted audience, and Google delivers exposure. From app developers, Google provides distribution and monetization, and the developers get money from the apps. The sweeteners or the publishers, they give money. Google gives them delivers audience and ad revenue share, and they get money also from the ads. So we can see a peer-to-peer comparison by market cap with other companies such as Microsoft, Apple, and Amazon. Basically, they're not like the same type of company because each one of them like makes something a little bit different, but they still compete between themselves. And we can see that well, Apple and Microsoft are well on top. Uh, and also you can see here that Amazon is a little below Alphabet, but these are like the biggest companies in the world, missing obviously Tesla and Nvidia, but no one can do as well as they do in this area. We can see some growth metrics I got from my Python analysis. And we had that the last 3 years we have a growth revenue between 11 to 17%. The growth profit it's between 25 to 37% and is decreasing. The stock price is at about 20%, so you can say. And we can see that the Python analysis confirms strong uptrend over the 5 years with recent price between 177 and 184. As I told you, we can see here the last quarterly revenues as of 2025. We can see that the most income Google makes is from search advertisement, YouTube, and Google AdMob. Also, we can see a little bit less in Google Play, but they also have a very high revenue in Google Cloud and other revenues. But we can see here there is a very interesting part. The total revenue they get is of 96.4 in 1 quarter for 2025. This implies a 14% increase in year on year, and the gross profit is 60%. It's super high, the margin they have. You can see the cost of revenues is the remnant. But the part that we're interested here is that from this 16%, we have 32% of margin. So it decreases quite a bit from 57 to 31, and the net profit is 28.2 billion. We can see that the most of the expenses goes in the cost of revenues or cost of goods sold than the operating expenses. You can see here the research and development department has a lot of expense, and it's obvious because they are betting a lot in AI and software. Some health dashboard and Python driver metrics we can see here is the operating margin of the industry leading is 32.1%, that as I told you, is really high for a company of this size. The net margin is 28.6. That also is exceptional. The debt equity is minimal, so they have a very conservative structure, meaning that they don't have a lot of debt and they try to use like more with cash, you know. The beta is 1.014. What does this mean? Beta is the volatility you have your stock on the market. So this means one in beta means that it's stable. It's almost with the market volatility. If it's below, it means that it's less volatile, and if it's above one, it's more. Some major holders are Vanguard, BlackRock, and SS is Street. I don't remember the name, but these companies also own have a big piece of the cake of Apple, Microsoft, Meta, and all of these tech companies. The dividend yield is of 0.43%. That means it's quite good investment. And some metrics you need to monitor are, first of all, the growth rates, how they're like moving, also comparing it with inflation. So revenue and profit growth, like a good point of this is that we get information every month or every day since it's a stock company, and you need to monitor this in order to know if it's going to be a good or a bad investment. The margin evolution is also really important. If you grow in your revenue but you have a lot of expenses and your expenses are more higher than the revenue, you're doing something bad. Cloud and AI share. So this is really important to know how Google is going to position in the AI world, and if Gemini is going to be a good product and can compete with Grok, OpenAI, Cloud. So it's really important to keep an eye on this. The capital allocation. Also, here it's really important to know where Google is going to put their money in the cash flow. So in dividends and share buybacks, or maybe investing or buying other companies, and regulatory outcomes. So we need also to have an eye on how the legal stuff is doing right now, and to be always aware of this in case of an investment. So finally, we can see here our final investment view is strong buying. And you can see that in a way that Google is a very core tech holding for growth and risk management exposure. So they are really big. They have a very good numbers in general throughout the years. And basically, they are the pillars of the AI and the technological world, because every one of us can use Google every day and will use Google Maps, YouTube, on any of their products. They have an accelerating growth, solid, and profitability is the best in class. I mean, you can see it here in the income statement that it's really, really good. The discounted valuation is really good. So what do we do in the discounted valuation? We forecast revenues for maybe 10, 15 years, and we bring them back with with a rate, with a special rate. Normally, it's the inflation rate or the bond rate, risk-free rate mostly. And we bring them back to the future to see how the company or the valuation of the company today, no, with the revenues in the future. So my recommendation, you should buy with conviction for long-term compounding and innovation exposure. And that's all. Thank you for your attention.